I've been on the Federal Reserve's website. They've got everything that you'd ever want to know about anything here. What you should be looking at, if you go to federalreserve.gov, you've got recent developments. So you can further look here and click on news and events. Everything that you see that moves the stock market can pretty much be found here. What's difficult is, how do you get through all of this? Even if you're very educated, how do you understand it? How do you summarize it down? There's just thousands of pages. So what I've been doing here is I've been going through the speeches, I've been going through press releases, I've been going through inflation reports, and I've been using artificial intelligence to summarize them. And then I've been using ChatGPT to help me explain things to people, because I'm not very good at explaining things, but I'm great at writing these scripts. So if we take a look here, we have Bowman. So if we take a look back here, speech by Government Bowman. Here's the speech. You can go to download the PDF. This is a long speech that you have to get through. Keep in mind, the software that I'm showing you right now is not available to you yet. All you can do right now is just go to Twitter and sift for information like this. We know that inflation rose 3%, expected was 1.8. It's up 66%. So the stock market keeps going up. I'm not going to trade right now. But what I am going to do is I'm going to try to decide and understand what's going on with the markets by using bidirectional automatic transformers, and then using those summarizations of these large documents found on the Fed's website. And I'm going to try to use ChatGPT to crunch all of what I've done with BART down into pre-generative transformers, GPT. And we're going to see if we can explain what's going on. I've got a couple of documents here. We've done Bowman. That wasn't very big. I'm going to paste that in. We're going to look at FOMC summary. So this is the last FOMC meeting. So we're just going to dump all this into ChatGPT because it does a great job summarizing everything else. This was a stress test. I'm not going to paste that in there. But what the stress test was, they're seeing lots of different scenarios play out and how they would handle it, like the dollar failing or something. So let's tell ChatGPT something. I have been using bidirectional automatic transformers to summarize Federal Reserve Board PDFs from speeches and other events to try to better understand the condition of the economy and where we are headed. Because inflation keeps going up and consumer spending is getting very high and the stock market continues to go up, but the Fed continues to raise rates. Here's everything that I've summarized using BART myself. Can you make sense out of this as a whole for everybody? So we're going to copy this, make sure we don't lose it. Then we're going to run it. So layering artificial intelligence is very smart, because if you layer artificial intelligence, at the end, the human input is what's important. I can use scripts all day long to do this. I'm not going to show you my script. It's very private, and I can't share it. But if you want to use it, you go to tweetsift.com, and you can use it to sift through Twitter with the recent most 100 tweets for whatever keywords you type in. Just like this. I wanted to know what's going on in Las Vegas because it's trending. Formula One's coming into town. Look at that. All the private jets that are going to come in, they just expanded an airport. You're going to see a lot of airfields coming here because of Formula One. That kind of money is insane. So I find these things out with Twitter, and I find it out using TweetSift. We also found out that U.S. retail sales rose to 3%. TweetSift drops off any special characters, percentages, periods. So recheck this information just to see where the periods and the percentage signs and so forth and so on go, because I have to remove that in order to make it more accurate. That being said, inflation was supposed to go up, like I said, 1.8%. Or not inflation, retail sales were supposed to go up 1.8%, but they went up 3%, which is a 66% increase over where they thought they were going to be at. So people are spending money. Now that's out and said. Here's what ChatGPT has to say. The Federal Reserve Board is focused on bringing down inflation to its 2% goal. And the high inflation that persists for a long time can lead to households and businesses expecting higher inflation in the longer term. There will likely be significant changes, regulations, guidance, and supervisory expectations over the coming year. And while there are costs and risks to tightening monetary policy to lower inflation, the cost and risks allowing inflation to persist are far greater, which means they're probably going to raise rates. The Federal Reserve's role is not to make credit allocation decisions for banks, but to apply appropriate targeted regulation and supervision to ensure that when a bank engages in activity, it does so in compliance with applicable laws. So what that means is they're not saying they're controlling the banking system, but they're kind of using their invisible hand. It's a term that's used, look it up, invisible hand, to push banks where they need to go. And they do that using their tools, such as raising interest rates or depository notes. So if we look down here, they call this tailoring. So tailoring regulatory approaches to address risks and striking an appropriate balance for each relevant bank tier. So you got local banks, community banks, big national banks. They all have different requirements they're going to be having. So you're coming back into 2008 when capital requirements started to come on and banks started having to hold more, because banks only have to hold 20% of their deposits. They can loan the rest out. You already knew that. The Federal Reserve is strongly committed to bringing inflation back down to its 2% goal. That inflation 2% is a big number here, and has raised its policy interest rate by 25 basis points, which just happened, to achieve this. Although inflation is moderated, it remains too high. The narrative up until now was they're not going to raise rates through 2023, which is turning out not to be true because people are spending so much money, as you saw here with TweetSift. And the longer it continues, the greater the chance that expectations of higher inflation will become entrenched. So this just, prices are going to stay here forever, and this is where it's going to be at. The Federal Reserve understands that actions affect communities, families, and businesses across the country, and everything it does to serve to its public mission. The entire reason the Fed was started was to control prices, and that's the only reason they exist. Control prices. Look up the Fed's history in Jekyll Island and see why the Fed was created, and you can form your own opinion on that. But Chairman Powell says although the disinflationary process has started in the U.S. economy, we just started hearing this word, it would be premature to declare victory or think the economy has really got this. He expects to see a disinflation process soon in the core service sector, but it currently is not visible. The Federal Reserve will continue to carefully watch the economy, inflation, and the progress of disinflationary process. Congress needs to raise the debt ceilings to move forward. So they're going to print more money here soon. We've been seeing that narrative, which is also, if you watched my melt up video, that's why we're melting up. People think more money is going to get printed. There's numbers that are coming in, and they're okay, but better than numbers that they're reporting on, which they're not even looking at. Big numbers, big players, look at the big money, follow them. Not what the news is necessarily talking about. The news drives everything, but if you're using TweetSift and you're sifting through the news and you're watching these videos, you're going to know a little bit sooner than other people by a few weeks. Growth will continue, but at a subdued pace. Wages are coming down, but still at a high level. The Federal Reserve is not particularly concerned about divergence. So that means that as wages are coming down, they're not worried that it's going to affect the growth of people seeking jobs. The market's expectation that inflation will move down more quickly is the bigger part of that. And the Federal Reserve does not see itself cutting rates this year, which was supposed to happen by December. The Federal Reserve no longer sees dependent as weighing on the economy, and consumer expectations are a very important part of the process of creating inflation. So that means people better stop spending money or they're going to keep raising rates. You better sit really still, let prices come down so they're fair for everybody. The entire purpose the Fed was made to control prices, so it's fair for everybody. Biden's big on this thing. And they're going to allow rates to keep going up until they say they've taken the excessive cash out of the economy, which just means that they're going to make things more expensive, and the wealth that you had created, you're going to have to spend it now. 401ks are at the highest withdrawal rate. Credit card debt's at the highest rate. Savings are at the lowest rate. The Great Resignation happened, and that is not a good thing for the United States economy, so they forced everybody back to work. And that's going to keep happening. And as wages continue to go down, people are still going to need work. And for all we know, they're going to not be able to fight this. And this is just the way things are now, and this is the price of things. So I hope you enjoyed Tweet Sift. Keep an eye out for when I actually drop the software where you can sift through all of this data, crunch it out, and use just a simple facing front end like this chat. So I'm Cody Kersicki with Tweet Sift, the Tweet Sift Report. Subscribe. Talk to you soon.